It's so good to be with you on this very special edition of the India Development Debate right here on ET Now. I'm Supriya, Shrinate, and we're going to be debating, discussing and perhaps also discussing the RBI credit policy, the first for this financial year. Bullish on growth and dovish of inflation. That's the sum and substance of the bi-monthly monetary policy review unveiled by the central bank today. As expected, the Monetary Policy Committee opted for a status quo on interest rates and the policy stance, but that surprised the market because MPC's surprisingly soft stance on inflation, which is now pegged at 4.4% for the second half of this entire financial year. Growth, on the other hand, is expected to hit levels of 7.4% in the current fiscal, a big market from 6.6% the previous one. On the flip side, the central bank kept a stoic silence though on the big bank scams and clash of interest charges that have been levelled against some of India's top lenders. Even on the dual regulation of the state-run banks, there was no direct answer other than saying that there is an asymmetric regulation from Governor Urjit Patel, who also said ownership and regulation are two different issues. Investors who started the day on a positive note thanks to the overnight rally in the international stock markets welcomed the RBI's dovish commentary on inflation and higher growth projections, with brisk buying in last hour of trade as well. By the end of today's trading day, Sensex sold 570 points, Nifty jumped almost 200 points. The RBI status quo policy sweetened by very positive commentary and, if I may say, a little dovish there. And the stoic silence is a big topic of discussion right here on the India Development Debate tonight. I've got a very, very eminent panel joining me right here on the show. Mr. Anand Sinha, former Deputy Governor of the RBI, Anand Narayan, money market expert, V. Anant Nageshwar, an independent consultant, Vansite Consulting, Shobhana Kamineni, President CII, Rashesh Shah, President FICCI, and of course Chairman and Group CEO, Edelweiss Group, and Maithili Busnoor Mata, Consulting Editor. So thanks each one of you for being with us. And Maithili, if I may begin by asking you, there was so much anxiety around this policy, and finally when it did come, it's very dovish on inflation. It talks about inflation projections being lowered for this financial year from 5.1 to 5.7 to actually 4.7 to 5.1 and 4.4% for the second half of the financial year. But in the same breath, the governor also speaks about upside risks that continue to plague and that continue to risk inflation. How are you going to marry these two statements? Aren't they in absolute contrast?
Yes, the RBI's monetary policy stance is frankly very surprising. In fact, more correctly, it is frankly baffling, because even though the policy action, nobody expected any change in rates, everybody did expect status quo on rates, the tone is so much more dovish than what market observers were expecting that it frankly is very surprising. The only way one can justify it is if you believe the RBI's inflation projections. But the problem is that the inflation projections are so much lesser than what anybody in their right senses frankly would be expecting, because look at the indications. The Fed is likely to raise interest rates perhaps even more aggressively. We have the possibility of trade wars. We have oil prices looking up. There's a very strong possibility of the fiscal deficit increasing. And so all these factors put together would suggest that inflation, if at all, is likely to move up rather than down, especially as the base effect wears out. But on the contrary, the RBI seems to suggest that inflation would be much less. So if in the past the RBI was generally overestimating its inflation projections, this time around we have the RBI surprisingly underestimating as compared to what the market was expecting. So there is this sharp divide. In the past, the RBI was much more hawkish than the market, and this time the RBI is being much more dovish than the market. So frankly, its policy, and especially if you read its monetary policy report, they are quite clearly at odds with each other. So it really does not make much sense to most market observers. Perhaps the RBI has its own reasons, which we will perhaps fathom as we go along, but at the moment it is completely baffling.
It's baffling as far as Maithili is concerned. Rashesh Shah, come in on that, and I'm going to quickly take views from Indian industry before I move forward with the experts and former central bankers. Inflation projections that have been lowered for fiscal year 19 despite risks existing both on trade protectionism and on crude. What do you believe is really happening in the RBI's mind? What do you believe is the Monetary Policy Committee's state of affairs? Why are they lowering inflation targets and at the same time saying there are upside risks that exist to inflation? Why are they lowering projections when risks are escalating? Rashesh?
I think overall the tone of the RBI statement is very positive. They are saying growth is up, inflation is down, expected to be down, which is all actually very, very positive, because for the first time I think people might say that maybe in the second half, if inflation remains fairly moderated, And in a way, I think it is also an outcome of the trade wars going on. Because of the trade wars, global economy might slow down, and the positive effect for that for India is that oil prices will come down, and a lower oil price may mean lower inflation for India. So I think both on inflation coming down, growth going up, it's been positive. Status quo was anyway what was expected, and I think upside risk is something RBI always speaks about, because I think if the rainfall is bad, if the food prices go up, so I think the risk on upside will be either from oil or from food prices.
Shobana Kamineni, I have a more uncomfortable question for somebody who represents Indian industry here. As President CII, do you believe at one level that if the RBI is going to be so dovish on inflation and has lowered its estimates despite some of the risks that exist, perhaps a change in stance was warranted? I'm not touching policy rates just yet.
You know, I agree with you. Two quarters ago, when we were really talking about this issue, and industry was so strident in expecting a rate cut, and that's what we need for these green shoots of investment, private investment, to take place. One is that the sector, that the credit should open up, and the second thing is we should have lower interest rates. But I think at this present moment of world uncertainty, the way the stock market is, and really the signals that we're giving of both macro and the state's spending, for it to be neutral, I think that this is something that all sides, that RBI has kind of poured, at least calm the waters. It's not to say that we're excited about it, but the thing is, I think that we would have really been in a crisis if they had raised the rates.
Anand Sinha, as a former central banker, when you see what the RBI has done on inflation and its commentary on the macro environment and talking about the upside risk that exists or that pose to inflation, and the governor listed some 5 or 6 factors there, does it somehow also send a signal that the RBI suddenly seems to be very confused about its own inflation targeting or its own inflation management at this stage?
No, I don't think so. As Mr. Shah pointed out, whenever a policy is formulated, obviously you can't really give a point to say that this is where we would be. There are always imponderables, upside and downside both. So he has pointed out what are the upside risks on inflation forecast. And let us look at also another thing, that 5 members of the MPC have thought similarly. So they must have had a lot of data points, a lot of analysis to have come to that conclusion. Now, the issue is, the way I look at is that all these imponderables, how are they going to fan out? That the RBI must have decided to wait and see. For example, MSP rise. Now, how much government is really able to procure, how much of it is a pass through in the consumer prices. Similarly, oil. Now, currently it is $70, no doubt, but which way it is going to go. So, I think what RBI has done, also taking into account, and for this you have to go back to the February policy announcement, where there is a very specific mention of nurturing the incipient growth. So, that also must have counted that let us not change the stance or change the policy rate at this stage when there are so many uncertainties. Let us try and nurture the growth, hope for the best, that the inflation remains as per the projected trajectory. And if things go in a different way, then in any case you have a revision or you have a look into monetary policy every 2 months.
Fair point indeed. Anant Nageshwaran, before I move any further, let's cut RBI some slack. And I think both what Mr. Shah and Mr. Sinha are essentially saying is that we are perhaps being a little unfair to the RBI given the uncertainty that exists on crude prices and threat of trade protectionism, global trade wars, deleveraging of corporate balance sheets and cleaning of banks. And is that perhaps why the RBI has chosen to be cautious? Status quo, yes, reduce the projections, but continues to state that there are risks that exist. Do we need to cut the central bank some slack here?
I think on balance, I would say yes. The answer is yes. We do need to cut some slack. We heard Maithili's rather strident disappointment, but I think between the last meeting and this, certainly the financial markets have hit some air pockets, notwithstanding the rally yesterday in the United States and elsewhere. And there is uncertainty, and leading indicators in Eurozone and in the United States have started coming off. And also the crude oil price, even though it was rising earlier, giving some concerns to India, it has stabilized now. Of course, today the RBI also released a lot of forward-looking surveys on inflation, consumer confidence, order books, industrial outlook, etc. They present a mixed picture. Inflation expectations from households have gone up. Consumer confidence is slightly better. But if you look at the industrial outlook and capacity utilization, those kinds of, especially the forward-looking components, they don't look particularly optimistic. So on balance, I think, as Maithili put it, the no action on the interest rate front is perfectly reasonable. And also coming to a really neutral stance, because although they were neutral in the past, they were trying to be a little bit more hawkish in their commentary. I think the hawkish tone in the commentary has come down. Officially, the stance remains unchanged. It is neutral. It was neutral before, it is neutral now. So I think on balance, perhaps I wouldn't be as critical as Maithili has been.
Okay, not as critical as Maithili has been, but Maithili is clearly disappointed that the RBI should have been in sync with its commentary. But let's turn focus, and I think we've spent about 15 odd minutes talking about inflation. Let's address growth. And growth projections are obviously very robust, from 6.6% in fiscal year 18 to 7.4% this financial and 7.7% in fiscal year 20. And the RBI says that there are clearer signs of revival in investment activity as reflected in the sustained expansion in capital goods production and still rising imports and improving global demand. For the first half of financial year 2019, it's likely to be in the range of 7.3 to 7.4% and 7.3 to 7.6% in the second half. Anant Narayan, can we now put up our hands and say that the worst is perhaps behind us?
I think we can never say that, Supriya. We've always got to be cautious. I'm going to give you a sort of a overall answer, including inflation and growth. First, clearly the micro numbers have been looking good for the last few months now. IIP has been looking good. PMIs have been looking good. The results which came out for December were better than expected by and large. So clearly at a micro level, things are looking better. But that doesn't mean that we're out of the woods as far as the macro is concerned, which continues to remain a point of concern. Just stepping back a second on the point of inflation, because it's linked again to growth. What is not surprising in what RBI has done today is the change in the first half estimates. Let's remember that in the February policy, RBI had estimated that the first quarter of this calendar year, Jan to March 2018, inflation will average 5.1%. Now that the actual number will be closer to 4.5 or 4.6%, much lower than what the RBI had estimated. To that extent, and this was largely because of, by the way, vegetable prices of all things. Now, to that extent, bringing down the estimate for the first half of the new financial year is kind of warranted, because there's some of that pass through which happens from the last numbers, and therefore you have to bring it down. What was surprising perhaps was the clarity with which they brought down the second half average as well to a 4.4%. Now the reason why that's confusing and surprising is because genuinely, do we have an idea? 46% of CPI is food inflation. 57% of CPI is food plus commodity inflation. Do we really know where food prices and commodity prices will be 12 months down the road? And given where we are sitting today, both on the fiscal front and on the external front, there are vulnerabilities. This is an election year. Both on the expenses front and on the revenue front, there are challenges. We are expecting a lot of uplift on GST revenues. We are expecting the expenses to manage themselves. On both fronts, there is a risk, and we could see a fiscal slippage. And that, by the way, will impinge upon both growth as well as inflation. Likewise, on the external sector, people don't realize that our April to Jan FDI, net FDI, is down by 25% year on year. These are not good numbers at all. At a time when global funding cost is going up, flows into the country are sort of drying up. and our trade deficit remains persistently high. Our current account deficit this fiscal is going to be the highest in the last 5 years. So you might have a situation, Supriya, that actually growth starts to look up because of fiscal spending going through, because of imports looking better. Having said that, it isn't really looking good as far as financial stability and inflation is concerned. And I think where the RBI has surprised us is by, not in the commentary. Commentary has been the same as February, which is cautious. But the confidence with which they say 4.4% for second half is kind of unsettling.
Surprising. No, I kind of agree with you there. Even I was very surprised that 4.4% is what they're talking about. And they actually went on to explain that how excluding HRA also, it is likely to be 4.4% for the second half of next fiscal because the HRA effect begins to wane. Shobhana Kamineni, growth levels of 7.4% obviously entail higher investments there. And as President CII, as somebody who's constantly speaking to Indian industry, are you as optimistic? Is Indian industry finally beginning to lose its purse strings? Because you know, if you actually scan through some of the investment figures, it's the brownfield that you see grow. The greenfield investments are still not breaking ground. At least the big ones certainly are not.
I think the RBI was quite heartened by the recent uptick in GST collections and also the e-way bill that has been introduced quite smoothly. And when we were, you know, at the consultation, what they heard all around was, yes, there are certain sectors that are certainly doing well, the expectation of a good monsoon, and I think that they're riding on these factors that will say that, you know, this is the time when they have to hold steady, and then the 7.4% growth is definitely a possibility. It's a probability and a possibility. So I'm hoping. But with respect to, but it will still ride on some of the old factors. It will ride on consumption. It will ride on some more public expenditure. Really, investments, I think, will be still a little shy, but should come in because we are talking this. There's definite boardroom discussions. I've seen some groundbreakings take place. I think that the auto and the consumer side and capital goods. These are things that have really shown strong recovery. So I'm hoping that the next phase of private investment will really kick this into the expected 7.4.
Mr. Sinha, are you as optimistic of private investment breaking ground? Yes, we've seen a little bit of an uptick as far as credit offtake is concerned. Even on perhaps the investment front, we are seeing, you know, a few notches go up. But like I say, the differentiation really is that the flywheel of fresh greenfield investments is still not breaking ground. You speak to a lot of Indian corporates and, you know, Ms. Kamini says they're boardroom discussions, but those discussions have still not resulted in, you know, action on the ground.
It will depend basically on how the IBC process and the required capitalization goes through, because the IBC process, if we look at, for the first batch, if I remember correctly, the deadline of 270 days is 10th May or something. So we have to see how it pans out, because the investment is going to come from the corporate sector, and unless the resolution, which basically means two things, one is deleveraging of the corporates and the required capitalization for the banks, how it progresses would determine how the investment picks up. At the moment, I do not think, because we are in the initial stages of IBC, there are so many lawsuits, and the new policy is naturally under process of getting fixed based on various experiences. So I would think that to be rather confident about the investment picking up, we will have to wait for some more time.
As President FICCI and as you know, as chairman of Edelweiss Group, what is your own sense on public finances, Rashesh Shah? Because I think one of the things that RBI very categorically speaks about is, you know, pickup in resource mobilization, primary capital market shows higher investment activity, but it does red flag higher risk, deteriorating public finances, and that I'm presuming will raise concerns on borrowing, which could get costlier, which could hurt investments further. Is that a concern that plagues your mind?
I think the large part of cost of borrowing historically has been more related with inflation and inflation outlook. But in a way you are right. I think on a long term basis, we need to have government borrowing money for investment purposes, not for normal revenue expenditure. So I think your concern is partly correct, because there is a lot of government borrowing which is going towards revenue expenditure, which is not creating capital formation for the country. So I would think on the whole, if we can slowly and steadily get government finances up to a certain stage through raising non-tax revenues, through having more efficiency in the government programs, and use government borrowing going towards investment, it would be very positive. But fortunately in the last few years, we are seeing a lot of investments from abroad. We have a lot of capital available, and in India also, with this entire financialization of household savings, where a lot of household savings is starting to move away from real estate and gold into the formal financial system. I would not be too worried about crowding out because of government borrowing. I think the cost and availability will always remain a problem, mainly because of inflation outlook and the kind of inefficiency in our financial sector we have with KYC and the banks ability to reach out to borrowers. So we need to ease all those things out, but I don't think government is to be really blamed for not easy access to credit for us.
All right. Anand Nageshwaran, given the fact that this is going to be an election year, and given the fact that the government will have to borrow for social projects that are crucial for its mandate, do you see the risk of public finance deterioration that the RBI has flagged actually become a reality? I mean, so far at least, this government should get credit for the fact that they may have not, been very, very disciplined and met it every year, but they haven't breached it by very high levels. Do you believe in an election year that caution can be thrown to the wind, and which is where RBI's concern kind of really comes to life? Anand?
Yeah, I'm sorry, I was on mute. I think the real issue is whether the second half after the election results in Karnataka, etc., will the union government feel under pressure to do some fiscal loosening. That is the risk. So at this point in time, I think RBI is right to point out that overall the combined public finances doesn't look that stable. It is not yet in alarming level, but the risk is there, and I think RBI did the right thing in flagging it as a concern going forward. So right now, I would say it's a 50-50 call. A lot depends on the outcome in the state government elections that are due in the next few months.
A lot will be dependent on politics, and that will perhaps depend how fiscal and policy really plays out. Maithili, let's talk about the more uncomfortable question, and that has to do with IBC. One of the things that the RBI seems to be, and the RBI Deputy Governor seems to be very confident about, is how IBC resolution will help growth pick up and how that will help reduce NPAs. But the reality is that the situation on the ground sees a lot of legal mess, sees a lot of legal quagmire as far as these cases are concerned. I mean, there is one legal case after the other. Everybody seems to be heading for courts. Given that situation, how confident are you of IBC really making an impact on the ground? Because it seems that the situation on the ground and what the RBI is expecting IBC to do are perhaps in variance.
Well, yes, this is another area which is rather puzzling, because though the IBC was necessary and the IBC might work out in the long term, medium to long term, in the short term it's going to create enormous problems, as we have seen almost every single case in the first 12 accounts and subsequently the next 40 accounts is mired in all kinds of legal wrangling, which is why the former Deputy Governor of the Reserve Bank of India, Mr. Mundra, also expressed the fact that the IBC, in fact, far from easing things, is actually making things more difficult in the short term to immediate term. So the RBI's confidence, in fact, Mr. Vishwanathan, the RBI Deputy Governor, he said that the RBI is very happy with the way the IBC is working out. So that again is something that is very difficult to understand, because repeatedly we have seen banks have not got anywhere, and in the case of the first 12 accounts, the deadline comes in the middle of April, not May. So it is hard to understand what confidence the RBI sees in the working of the IBC process. As of now, we have an expert committee which has reportedly given its comments to the government on the kind of changes and the tweaks that are necessary in the IBC. Now, that again is going to lead to a fresh round of litigation, with many of the companies saying that we were not given these opportunities. So, should these changes be made retrospectively or prospectively? So, as of now, there is nothing in the IBC and the way it is worked out to give that kind of confidence to the Reserve Bank of India. So, once again, an area that leads to further puzzlement, and we'll have to wait and see what is it that the RBI sees that you and I do not see in this, Supriya.
Okay, there is something that Maithili and I are definitely not seeing, but the RBI does. But Rashesha, let me put you in a spot there, because I know a lot of your corporate friends and people are taking legal recourse, the guys who've ended up in LCLT and IBC. My question really is that the RBI seems to be very hopeful of this, and yet Maithili chooses to use a very strong word, which is legal wrangling. There's a legal mess of sort out there as far as the IBC is concerned.
What do you call a legal mess and a legal wrangling? I would say, because we at Edelweiss are also, in the middle of quite a few cases, I see it as a normal process that is evolving. Also remember, here there are, thousands of crores at stake. There is a steel company where the bids are, let us say, between 30,000 and 35,000 crores. So the view that the banks have taken is that if it means maybe a rebidding, maybe optimization, maybe calling for, for some more bidders out there, and if it results in a delay of 8 to 12 weeks, and that is all that I expect. I think all the things we are seeing in media is being played out in a way in terms of ball by ball commentary, but I think it's going to add about 2 to 3 months. But a 2 to 3 months delay for banks to get a couple of thousand crores more, I don't think it's a bad deal. I don't think the kind of legal issues that are going on is going to delay the resolution by 2-3 years. It will only delay it by 2 to 3 months, which I think is an affordable cost for the optimization that we will get. So I'm actually very positive. I'm happy with the way this process is going, because this is not like something you are buying in a supermarket where there's a printed price and you go and pick it up and pay the cash counter. These are assets worth thousands of crores with multiple issues out there. I think we should be considerate, because these assets have been NPA for last 3-4 years. If it takes another few weeks, it is okay with for the process.
No, I really don't think any of us are disputing the fact that this is not a supermarket and there is a printed price where you can just go pick up assets, and I know this will be a long drawn process. But that also brings me to my next question, and Anand Narayan, this question is really for you. We are going to see perhaps a lot of haircuts that these banks will take. Yes, they will end up getting some money back by the end of this entire exercise, which is also going to be long drawn given the legal issues that it's quagmired in. But at the end of this, they will have to take haircuts. At the end of this, banks are also dealing with the kind of controversies that are coming to fore, and I'm going to dedicate an entire segment to that. But what's really happening is that people are talking and people are optimistic about a credit offtake. The collateral damage on account of these scams doesn't seem to be finding a place in that narrative, and that will mean that banks will be extra cautious. That will mean that banks will perhaps be very wary of lending. Aren't those legitimate concerns, and shouldn't these also plague the minds of people at RBI?
Oh, absolutely, Supriya. So let's look at it this way. To this entire mess which is there in the banking system right now, you need 3 things. One is recognition, second is recapitalization, and third is resolution. Now, unfortunately, we are midway or very early in all the 3 stages. First is recognition. Let's not forget, we also have that 12th February circular which came out, which finally kind of consolidated all of the NPA related circulars on recognition, on which there were a lot of protests from bankers. In fact, there is a community which is still waiting for some forbearance on that circular as well. But by all accounts, it does look like for the next 2 quarters, we actually see additions coming on to the level of stressed assets. Some say to the extent of 2 to 3 lakh crores maybe, which means the story is still not over. Once that happens, then you have the second problem, that the 2.11 lakh crores which the government set aside as part of an overall recapitalization package might simply not be enough, and therefore you might need more capital come through. And all of this, at least there is some progress which is happening and underway. The last part is resolution, which clearly hinges upon NCLT process and the IBC process, where frankly we are still to see the proof of the pudding, the eating really. Now, to be honest, there is no way out of all of this. We don't have a magic wand where we can solve these three aspects overnight. And I guess the system as a whole across, the industry, bankers, and the government and RBI are trying to do what they can. We unfortunately have to go through this pain. But I do think that, despite the teething troubles, our only hope is that this resolution process actually works. And maybe over a year's time, we see some resolution and therefore the system limping back to normal. But in the interim, I do agree with you, Supriya, that to expect that the investment climate will come back in the country with a snap of fingers is not going to happen. This is going to be a long drawn out process. The process is still underway. It's far from being complete. And it will be at least 3 or 4 quarters before we can say this is behind us and now we can start a fresh investment cycle. And to the point you made about the governance issues in the meantime, unfortunately, it's become part of this entire cathartic process as well. So adding to the confusion.
And I mean that's an area that I would like to discuss separately. But Mr. Anand Sinha, just before I finish this part off and move on to the 2 other issues that we want to discuss in this show, how hopeful are you? Because RBI's own optimism on growth, I'm sure, is laced and perhaps is built on the fact that there will be NPA resolution, that money will come back to the banking system, which will then be lent. Do you believe they are being a little too optimistic, given the pace at which this is happening? I mean, I know there's a 270-day window, but look at the cases that people are seeing that have ended up in courts.
No, personally, I think this is going to be a long drawn process, and that is why, in reply to the earlier question, I said it depends on how it pans out. Now, if there is a will to try and sort out these issues as quickly as possible, still we will have some hope. Otherwise, there will be delay going forward, and Mr. Shah is optimistic in thinking that it may not be beyond 2-3 months. I would say that it all depends on how the issues are tackled. It may be even more. So, the issue of growth essentially hinges on that, and of course, the question of capitalization, because as Anant Narayanan pointed out earlier, and I mentioned in my reply to the earlier question that we need more capitalization. The present level of capitalization is simply not going to work. And if you look at the haircuts are quite large, and in many cases, at least in those industries which don't have a good position right now. Steel, of course, is doing well, so we find very aggressive bidding on steel. We may not find that in so many other sectors, in which case the haircuts are going to be large. Now, I'm pretty sure that the kind of haircuts which may come up may not have been factored into the capitalization program which has been laid out by the government. So, it is a dynamic situation, and we have to really work on all fronts so as to speed up the things. But yes, in a nutshell, I will have reservations on how soon the growth, particularly the investment from private sector, can pick up.
Indeed, and I'm glad everybody is being candid to say it's not as if we expect investments to begin raving up today. But I really want to talk to our viewers and our panelists on something that I thought I found very uncomfortable in the policy today, and I was there at the RBI. It had nothing to do with the policy statement. It had to do with the press conference. And Shobana Kamaneni, are you disappointed as a member of the Indian industry that the banking sector regulator, the RBI, did not make any proactive statement, said really nothing as far as the big controversies in banks are concerned? I mean, whether it was PNB, the governor chose to say nothing. There was no mention of ICICI Bank and the controversies there. As a regulator whose own credibility has been questioned on this count, shouldn't the RBI have been proactive to talk about it? Shobana Kamaneni?
I frankly think that everything is out there in the media. The PNB has been out there for what, the last month? What will RBI rehash and start talking? I think that so much has been said. It's been scrutinized. It's been looked into. Let's put this behind us and actually get something going with respect to the other banks. Get them strengthened. Move ahead and get credit out there. And I think that RBI was sending a strong message of positivity by just keeping the rates neutral. So I think that that this monetary policy was, that was their job of why and the justification of it. So I think that we should all accept it and move on.
As journalists, we're supposed to be skeptics, and one of those rare occasions where I'll completely disagree with you. Rashesh, let me put you in I know as members of corporate India, I think I'm putting both of you in a spot there, but I will still ask you that question, because the regulator's job is not just to manage forex or manage inflation. The regulator's job is also to assuage concerns and to dispel speculation if it does come on its own credibility. I mean, you've got people in New Delhi and in the government saying that the regulator needs to have a third eye, and this was due to supervisory failure that the PNB scam happened. You have questions being raised on why the regulator did not act on the ICICI whistleblower complaint. On that, and I'm really talking about those reasons, shouldn't the RBI have spoken? I mean, I know the issues in the media, but isn't it the regulator's job to also assuage concerns, bring more clarity?
I wouldn't say so. I think like for example, RBI forcing the AQR policy, RBI forcing a lot of governance issues have been highlighted by RBI in banks. We are also saying RBI taking a more aggressive strand on NPAs, on the CEOs of banks being held for performance and other issues. I think RBI is actually taking a more aggressive, more proactive stance. All this is evolutionary, and hindsight is very easy to say it should have been done a few years ago. But I think, and even on the government side, I think government has been fairly proactive with recapitalization, with ensuring that the banking sector issues are not brushed under the carpet but are addressed head on. So I'm slightly more positive. Of course, we have to resolve a lot of issues, but I don't think the government or RBI are shirking away from any of the problems.
No, I really don't think, Rashesh, and I'll take a quick follow-up with you. I don't think the RBI is shirking away from that. I mean, that's not what I really meant to say. But you have a press conference, and I think it's better I take those questions with commentators and experts. But to you, the question really is that, the RBI's role as a supervisory regulatory body is under question. I mean, people have said that it all happened because the RBI failed to regulate and supervise. On that count, on that flawed regulation charge, shouldn't the RBI have spoken? I mean, the RBI can't be in denial over this, can it?
Sure, but to actually answer your earlier question also, RBI or institutions like RBI have to be careful, because when there is a lot of controversy, additional statements by the central bank can add to the controversy, not reduce it. So I think an RBI has been a very conservative, very careful regulator over the years, and I think they are continuing with that. Maybe all of us in the markets and in the media may want RBI to stir the pot a little bit and come out with its own stand on that, but it may not always be helpful. So I think on that count, I wouldn't expect RBI to come out with easy statements all the time.
Okay, I really have a lot of things to say on that, but let me go across to Maithili before I take it across to Mr. Anand Sinha, who's been at the RBI and will perhaps give us the best possible perspective on this. And Maithili, you saw the press conference, you saw the first 6 questions, and they were all on inflation. I mean, people from Hindi news channels want to know on inflation. I thought they would want to know on the scams, because that is really the collective consciousness of this country. We would want to know what's happening as far as the RBI is concerned. People in New Delhi say the RBI should have a third eye as a regulator. There is just so much slack that the regulator has received. I'm not saying RBI needs to stir the pot, but forget about a proactive statement. Questions were not taken up on these issues. Maithili?
Well, yes, absolutely, Supriya. Yes, I said absolutely, I would agree with you, because though the RBI has had a fairly unblemished record as far as inspection supervision of banks is concerned, because to be honest, India hasn't seen the kind of banking crisis that many countries, even developed countries, have had. So the RBI's track record as a regulator has been very good. But in the context both of PNB and more particularly ICICI Bank, I think the RBI has been found wanting. In the case of PNB, it was an operational risk, it was an outright fraud. So yes, you could say that RBI cannot be held responsible. But in the case of ICICI Bank, where a whistleblower had sent a very specific letter, a very detailed letter making all kinds of allegations, and this was sent to the Reserve Bank of India as much as 2 years ago. I think it was very important at this juncture, when there is such a crisis of confidence in the largest private sector bank in the country, that the RBI should have come out with a statement trying to assuage these fears, saying very clearly, did they receive such a letter, what action was taken, if no action was taken, why no action has been taken. So, I think it is very important that the RBI should send a signal that it is in command of the situation, that there is no reason whatsoever for depositors to fear, because remember, this is a bank which has seen twice in the past, it has seen a run on its account deposits. So, to that extent, it is very important for the regulator to come out and say, we are on top of things. I think that message would have done a world of good. And when the RBI opts not to say anything of the sort, and when the governor does not take all questions from the media, that does not send out a very right example. I think governors everywhere, people in public position, must be willing to face questions, pleasant as well as unpleasant. And that comes with the turf. So, I think it is important that the Reserve Bank of India does not duck unpleasant questions, and where possible tries to send out a signal that there is no need whatsoever for depositors to fear. I repeat, there is no reason for depositors to fear in India, but when the central bank and the regulator, supervisor says that, it makes a world of difference.
Mr. Anand Sinha, will you agree, you may disagree with a lot of what we say on RBI not making or making a statement, but do you believe at one level the central bank missed the platform and missed the opportunity to at least assert and convey to stakeholders that it's absolutely in command of the situation and in cognizant of whatever's happening around it?
Well, I haven't seen the press interview today. I was busy with meetings, so I am not in a position to comment on that. But in general, I would say that RBI possibly could have said something, but again, let us look at the three incidents that we are talking about. What can RBI say? As far as PNB is concerned, a committee has already been appointed to look into various aspects of why there is so much of divergence and supervision, how it should be framed and all that. So, RBI could have said that in the light of PNB scam, we have set up a committee, and these are the issues that would be looked into, and decisions would be taken. This much could have been said, but I think if it has not been stated, it may be because of the fact that it is already announced publicly. Let us look at ICICI. In the case of ICICI, it is well known that RBI is looking into it, and what RBI can say unless the investigation is complete. So, again, that is an information which is there in public domain. So, I think that well, I mean, I will disagree with the fact that some statement could have been made, but all that I am saying is that the statements which could have been made today have already been made. The last and the most important question raised by RBI about RBI not having enough powers. What could have RBI said? Unless there is a progress with government in agreeing to relook into those things, unless there is some such understanding, unless there is a progress on that, what can RBI say? RBI has already stated its position. So, I won't take it too seriously, but maybe I would agree that even some kind of statement which I referred to having been made could have perhaps wrapped up this situation in a better way as far as the external stakeholders are concerned.
No, I agree with you that, there are some things are out in the public domain. It's just that there was a platform, there was an occasion, people were all watching the RBI press conference, common people whose faith in banking could be shaken were watching it, and I just thought that was a good occasion for the RBI, its governors, its deputy governor to come out there and talk. And, talking about the asymmetric bit, I think the governor did make a very tangential reference to it when he said that the regulation of PSBs and private banks is asymmetric in nature, and then he let Deputy Governor Vishwanathan take over, who said, for this the Banking Act will have to be amended. But quick closing comments, and I'm just going to go across to both Anands on my panel. Anand Narayanan, to you then, and I will continue to ask this one question. Did RBI miss the opportunity and the platform to clarify, to assuage concerns, to soothe and frayed nerves that it's a central bank in absolute command of the situation, and it is not wavering away or it's not shying away from answering the tough questions?
Three quick points on that, Supriya. First is, I'm kind of surprised with your community. Frankly, the question should have been coming from the press. What are you folks doing asking about inflation and GDP versus GVA and stuff like that?
Exactly. I'm absolutely with you on that. The only trouble with that was that the press conference is conducted by the governor who chooses to ask people the questions, and the people who were given a chance to ask questions did not ask those.
So
but you're right.
Maybe you should be telling that story as well.
Yes.
Maybe your community should be telling that story as well. And I'm sure you'll do that. I'm sure you'll do that. The second point is I do think you're right. I do think maybe the communication could have been done better. Because, I've dealt with the RBI for the last 25 years. I've disagreed with the RBI on several policy issues, but you can never question their intent or their integrity. And this is an experience of 25 years. So whatever the issue is, whether it's PNB, ICICI, whether it's the asymmetry of regulations, on all of it, I'm sure the RBI has a good story to say, which can assuage the population as a whole. So to that point, I think absolutely there could have been a communication done. The third part is, I'll just reiterate this part, which is I'm sure in the background there is work happening. Whatever be the governance issue which is dogging the minds and which has captured the imagination of the populace as a whole, I'm sure, knowing the RBI, there is ample work happening in the background to get to the root of the problem and to come up with a solution. So all 3 points I think are equally valid. We should have been asking the questions. Yes, I do think the RBI could have made a soothing statement without giving too much of individual information. And the third part is, I do think, and from the core of my heart, and I'm not in a banking system right now to be beholden to the RBI, I do think the RBI is a great institution, and I'm sure it will do what is required to clean up the system.
No doubt about that. And Anand Nageshwaran, the last word to you then. I don't think any of us, and I put my hand on my heart when I say that none of us are doubting the intent or the integrity or the credibility of RBI. I think those are men with absolute credibility. They manage a monetary regime. I think they're very responsible men. I think what we are questioning is the lack or the absolute absence of communication. RBI in the past and till very recently was communicating with us, was communicating with stakeholders, was telling market participants and experts what to expect, what not to expect. That communication seems to have completely shut down, and today perhaps was one more example of that. So I'm really making a reference to the communication breakdown, and will you agree with me on this? Anand Nageshwaran.
Yeah, I think on balance I would come down on the side that some information rather than nothing would have been better, because even if there is nothing new to say, even saying that would convey a message that you are on top of things. Just say that we are on top of things, we understand your concerns, please be assured that we are looking at all angles and we don't want to feed information just for the sake of feeding it, but you should be rest assured that our attention is focused on this, or something to that effect. So I think some sort of reassurance that somebody is in charge should be conveyed, because I think in these situations, in fact, optics are as important as substance, and I think the optics opportunity has been missed out. So I would agree with that.
Okay, the optics opportunity perhaps missed out by the RBI, but let's quickly wrap this up. And I can't thank my wonderful panel enough for sparing time out and being with us on the India development debate this evening, starting from our consulting editor Maitri Bisnurmat to Mr. Anand Sinha, Mr. Anant Narayanan, Mr. Anant Nageshwaran, Rashesh Shah and Shobhana Kamineni. Thanks very much for being with us. The RBI's policy was a status quo. Yes, the RBI continues to believe that growth will finally pick up, dovish on inflation, but it's the stoic silence on controversies that have come to plague India's largest public and private sector lenders is what is causing a lot of disconcern as far as stakeholders are concerned. And hopefully RBI will get back to communicating with its stakeholders. Thanks very much for being with us on this edition of the India Development Debate. There's lots more coming up right next on ET Now.